We'll just wait for some time.
Yes, ma'am.
Good afternoon, Pallavi ma'am.
Good afternoon, ma'am. We'll just take a couple of minutes, maybe 1-2 minutes, and we'll start.
Okay, ma'am.
Yeah.
Good morning, madam.
Good morning, sir.
My voice is clear?
Yes, sir.
Thank you.
Should we start, ma'am?
Yes, ma'am, we can start.
Okay. So good afternoon, everyone. A very warm welcome to all of you. On behalf of the Institution Innovation Council at Symbiosis Center for Distance Learning, I'm delighted to welcome you to today's workshop on Angel Investment VC Funding Opportunity for Early Stage Entrepreneurs. We are honored to have with us Ms. Shraddha Shinde, who brings with her vast academic and research experience in accounting, finance, and entrepreneurship. Her insight today will help us understand funding opportunities, investors' perspective, and sustainable financial strategies for startups. We sincerely thank Ms. Shinde ma'am for joining us today and sharing her expertise with our students and participants. Without further delay, let us begin the session and gain valuable knowledge from Ms. Shinde. For you, ma'am.
Thank you, ma'am. I'll just share my screen.
Yeah.
Okay, so is my screen visible to all?
Yes, ma'am.
Yes, ma'am.
Okay, so let's start with the today's session. A very good afternoon and a warm welcome to all participants. I, Ms. Shraddha, welcome you on behalf of Symbiosis Center for Distance Learning on this IIC organized session on angel investments, venture capital funding opportunities. Especially, we'll be talking about for the early stage entrepreneurs. Okay. Now, before begin with this, let me have a clear understanding about the concept related to the angel investments and venture capital. So what we will be discussing throughout in a session is all about the investments, opportunities available in front of the investors. Also, we will be talking it from the perspective of an investors, what they are looking for. Okay. So we will be discussing the meaning, understanding, concept, process of an angel investments. We will be also talking about the venture capital opportunities. So we have these things in our mind, keeping that the early stage startups, or we call it as a startups, where they require a funding, so whom they can approach. Okay. So the entire session is planned in a way that the topics that we are covering today is about, obviously, we'll be talking about the introductory part. Then we'll be talking about the different stages at a startup funding. Then we'll be talking about the opportunities for funding, that is through the angel investors and the venture capital. So we will be discussing these two perspectives, and we will be also talking about the differences between these two. And at the last, I'll be giving certain tips to make sure that your startups whenever you are processing for the angel investments or the venture capitals for funding requirements, what things that will help you out to gain the more fundings. And obviously, I'll be discussing few parts on the mistake that you should be avoiding while going for these investments. Okay, so let's begin with the today's session. Yes, Harshita, yes, I would be definitely happy to answer your queries in between. Yes, we'll be basically not talking about internship opportunities. We are majorly focusing on the startups or an early entrepreneurs who are seeking for the fund requirement. So understand the basic concept of angel investments and venture capital funding evolves around the process of the early entrepreneurs who are requiring funds, and we will be also discussing about the startups who are also requiring the funds at the beginning stages, obviously, before going into the public market to raise the funds. Okay, so let's start with the session. Now, first understand that what a business is looking for, right? So business is looking for the fund requirement, the very basic concept, okay? Because without funding, you cannot proceed. So obviously we are looking for the fund requirement perspective, and after getting the funds, obviously we will be diversifying and investing those funds in a such a way that we are getting the maximum returns from it, right? So every business idea requires funds so that their ideas can reach up to the marketing phases and actually delivering products to the customers. And after delivering products or the services to the customers, they will be generating revenues out of it. And as a part of an investment that they are looking from in the initial time, obviously the investors will look from the perspective of getting the returns from those investments, right? So there are two perspectives towards it. First perspective from your end, as you are an early entrepreneur or a startup person who wanted to get an investments done into your ideas, right? So obviously you will look for the opportunities where you are getting the maximum amount of funding to you. But from the perspective of an investor, so what they look for the perspective of they will looking for the opportunities of an investment where they will invest their funds, and as a returns they will be getting the maximum returns from it, right? So whenever you start a business, it is going to be very exciting for you, but at the same time it is going to be very much challenging for you. Reason being is ideas can be easily generated, but when you convert those ideas into prototypes or into actually putting into the R&D efforts and convert those ideas into a final product, it is a time consuming, challenging journey for you, right? And to reach to the final product, there are a lot of hurdles the entrepreneurs face. Especially the major hurdles faced by them is an access to the capital. Now, capital means here I am representing the word capital with the funding requirements, right? So every startup entrepreneurs, every early stage entrepreneurs require funds. So where to get these funds? Obviously, these are the resources available in the market through which you can gain the funds from it. Now, whenever there is an idea clicking in your mind, it may be for any new product that you want to develop or any existing product that you want to make it to the refined level. So greater ideas often fail not because they are lacking the potentials, but they fail because they ran out of money. If you have any idea into your mind right now, maybe one of the major obstacle that is stopping that idea to convert from ideas to the prototype level is the obstacle of the funding requirement, right? So obviously you have that question in mind, whom to approach, where to approach, and how to approach. So obviously my baseline for this entire discussion for the day is going to be about how to approach angel investors and how to approach these venture capitalists. Specifically, we are discussing it from the perspective of an Indian market. Okay. Now, when you require funds to start any business, obviously you are looking for the investors who are ready to believe in you. Because unless and until they believe in you, they will not give you the fundings. So you look for a person called as, we in finance call it as an angel investors. We treat them specifically with the term angel, keeping in mind that they are you out into your crisis situations, right? So for the early entrepreneurs for the startups to the idea generation phases, these investors help them to turn their ideas from idea phases to the prototyping and to the final stages. So angel investors, along with the venture capitalists, helps you step into your problem areas and they are ready to offer you the funding requirements. So they not only provide financial supports, but they also give you the mentorships because they have a vast amount of experience associated with them. They give you networks. Yes, they do help you in creating a greater network background, and they also make sure that your business is creditable enough so that whenever the startup stage will pass on to the next level, obviously at that level, people who are looking to invest into your company must be having a greater credit base created by you. So these angel investors not just help you into the monetary terms, but they will work as a guiding partner. They will help you as a mentor. They will help you to create a better networks and a creditability in the market, so that whenever you go into the further stages, you don't have to relay back to the angel investors, but a common people like you and me must be able to depend on you for the investments. Okay, so is it clear, the introductory part? What are angel investors and why they are important in the business? Is it clear?
Yes, ma'am.
Okay, thanks a lot. Now, who are they? Angel investors are usually the successful entrepreneurs or a professional, successful professional who have enough wealth with them and they are ready to invest their personal wealth in promising the startup at a very early stages. Now, why do startups needs to approach to these angel investors? Okay, yes, we are talking about this, Yogesh. We are talking about angel investor. Who are they? Why do you think that startups and an early entrepreneurs need to wait for the angel investors? Reason being is you are at the very basic stages of idea generations and converting those idea in some or the other way, putting efforts to make it into the actual product. So at that stage, your physical verifications is not available with you with any kind of assets because you don't have any kind of an asset. And when the early entrepreneurs or a startup people, they approach the banks as a lending institutions to give them the funding. What bank will ask for? Obviously, they will ask for some or the other way, they will ask for the mortgages, right? Because as per the banking policy and the rules, they will only give you the loans if you have any mortgages. So startups do not have any mortgages with them. They have not yet built up any assets with them. So they cannot get the funding from the banks. So at this stage, they will be looking for somebody who is ready to believe in their thoughts, who's ready to believe in their ideas, and also who has enough capital available with them in the part of a funds. So there are entrepreneurs who are having excess amount of funds with them, having their personal wealth which they want to diversify, or some professionals who have earned enough as a personal wealth and they want to explore the areas where they're looking for these startups. So there the actual meeting of startups and the angel investors comes into picture. So what angel investors will do? Angel investors will try to take the risk, try to bear the risk on behalf of the startups, where the traditional lenders like bank, they won't trust you in that cases. So the startups will approach to the angel investors. Then there is a venture capital firms, which is a furthermore step ahead of that angel investors. So what are these venture capital firms? The venture capital firms are investing institutional money into business. And which business they are investing into? The business which they are ready to scale, bring out not just funds, but also they are ready to help you into the strategical guidances, governance, and also they will be talking about the connection building, network building. So angel investors are ready to give their wealth by trusting you. Venture capital is also giving you the wealth along with give you some networking backgrounds, giving you some mentoring, guidances, counseling, and they're ready to upscale your business. This is the major difference between angel investors and venture capitalists. Yes, Harshita. Harshita, let me just finish with the content part, then I'll be happy to answer your queries. Okay. Now, let's understand this with a very simple example. Okay, now let's talk about a story. Which story? In 2008, there were two young entrepreneurs who were in Bangalore. And what they were doing? They were selling books. But they faced lot of struggle to sell the books online, right? So what they have done, because they have a shortage of funds, because they were operated from a very smaller apartment, they have a very a simple website to offer, and they are carrying a very important part, that is a dream with them, that they want to become a successful entrepreneurs. But because they were very young, because their idea was very small, it was very difficult to get the physical feasibility of those ideas. So bank were obviously, because of their banking lending policy, they were refused to lend money to these entrepreneurs. Obviously, family and friends can also help them with a very smaller amount of a funding. Then what has happened? All of a sudden, they clicked with an idea to approach to the angel investors. So angel investors step into these phases where they're looking for the funds, where nobody around them was ready to believe in their ideas, and where the family and friends could even provide them with a very limited amount of funds to work on their startups. So the angel investor steps in. The angel investors believe in their ideas because not because they were targeting the huge revenues, but the angel investor look for the passion. They look for the potential for the growth in the upcoming years. So the angel investors gave them a very smaller amount of investments, which give them the overall idea where they can build, where they can grow, and where they can conceptualize their ideas into actual product. So angel investors step in at that phase, and these two young entrepreneurs were jumped in with these angel investors funding, and they have created the history in their life. Okay, so what they have done after the angel investors help, then comes the sales were increasing. Yes, they were reaching very high. So now to scale up the business with the bigger funding, these two young entrepreneurs have approached the venture capital. And venture capitals help them to scale up their business, bringing more experienced advisors, and help them to open the doors of the market. And which company we are talking about? We are talking about the company called as a Flipkart. Okay, so the initial investment that they have started was with an angel investor who believe in their idea of selling books, right? So if you all are agree with me, the Flipkart has the basic idea of the two young entrepreneurs started up with this startup idea of selling books online, right? But due to lack of funds, they couldn't jump in high into their existing profiles. So they approached by the angel investors. Angel investors initially helped them, and after a couple of years, after the angel investments help, they approached the venture capital to put it onto the larger scales. And now we have seen the result of this. Company called as a Flipkart is actually working as a very good company into the e-commerce model into this year, into the existing market. Okay, so this is how the angel investors and the venture capital will help you starting from the phases of idea generation till the execution of reaching to the newer heights. Another example, have you heard about the company called as Airbnb?
Yes, ma'am.
Yes. So what they have done actually, it was also the startup. It was in the year 2007 when there were two designers in San Francisco. They couldn't afford their rent, where they were staying in a very smaller apartment, but due to some reason they couldn't afford their rent. So what they have started with, to get the extra money, to earn some extra funds, they have put the extra 3 mattresses into their apartment, into their existing apartment, right? So they were making that apartment available, and they call this service as a air, bed, and breakfast. Means what? Means into their smaller apartment only, what they have done, they have provided an additional requirement and they have given an additional air mattresses to the person who wants to walk in and stay with them. They will be providing air. Air means in the space, they are talking about the atmosphere, the place that they are providing, the bed, and also it will be followed by the breakfast. So what has happened? This is a very basic idea that they have started with, right? Means to rent out or to let out your apartment with the concept of renting out to a people. So most of the people, because this was a very silly idea at that time, I'm talking about 2007, many people were laughed on them. Who would pay to sleep with the strangers on a floor? Right? That was the question which was asked to them at that time. Bank obviously didn't believe into their concept and they don't want to give them any kind of a fundings because yes, it was free from the mortgages. So bank were not ready to invest in that case. But at that time, there's a one angel investor who believed into their vision and who believed in their ideas and their passion, and then the angel investor gave them a funding of $20,000 at that time. And they keep on, the angel investor keep on some or the other way, they keep on investing into that company. Later on stages, when the company grows up on a higher scale, they actually launch their company called as Airbnb. And then on the larger scale, where they require more funds, which the angel investors cannot support with them now, because angel investors are the professionals or any individual or HNIs, high net worth individual, who has their personal wealth to invest. So how much they can invest, there is a limit to the investment given by the angel investors. But now company want more funds. So they approached to the venture capitalist. So the smaller checks were not enough for them, which were given by the angel investors. So they have refined their platform of offering. And now they attract their host and the guest, where they have proved that their entire model of providing air, bread, and breakfast has worked very well in the market. So they approach the venture capital firms. Now, who are venture capital firms? They are the institutional investors. And what they do, they are ready to fund you and they are ready to guide you, mentor you, and give you the networking part. So this venture capital firm saw their traction and poured a lot of millions of dollars into them as an investment. And today, at this rate, it has almost cost $70 billion market capital valuation of Airbnb, which was started with a very basic idea of starting with the renting out that smaller apartment. Now you tell me the importance of angel investors and the venture capital is there or not? Yes, it is there. We need somebody. Now imagine that in 2008, nobody would have believed in those two entrepreneurs who were selling the books in the Bangalore. If nobody would have believed in their ideas, was it possible for you to now shop with the Flipkart? No, it was a complete no, right? Because nobody would have believed that time. But somebody has believed, angel investors have helped. So this is what is offered in the market. Similarly, in this model of Airbnb, if nobody has believed on these two designers, like a bank didn't believe in them, so they didn't give them the funding. So it would have not been a very great company offered with this type of a model in front of us. Okay, so this is why the angel investors and the venture capitals are important into the existing market structure. Okay. Now, you all might be having some or the other ideas into your mind, right? I assume that you are going to be a budding entrepreneurs or you are currently working professionals, but you some or the other way, there's some ideas clicking into mind, but this is not possible to work it out. So this class will definitely, I will try to help you out like how to conceptualize it and how to approach these funders. Now, the basic question that has been asked is why funding is critical for these early stage entrepreneurs or a startup. So why it is very critical to get a funding. The very important reason is nobody is ready to believe into their ideas. So the very first problem that they faced is a product development issues. Turning an idea into a real product requires money. Is it correct? Is it correct? If you have idea and now you want to put that idea, get it to the actual product. Does it require funds?
Yes.
Yes, it does require funds. It requires fund for research, development. It requires fund for prototyping. It requires fund for testing as well, right? So product development, because the financial institutions who are ready to fund you, they look for some or the other way, they look for the returns from you. And you are at that stage right now where you have just conceptualized your idea and that idea is not yet transformed into a final product yet. So you are still at the idea generation stage. So you want to put efforts into R&D, prototyping and testing. And for all this, you require fund. So the angel investors help you at this level. This is one of the problem. Second problem is talent acquisitions. So startups need skilled people, right? Because as a startup, if you hire a fresher, you are also a fresher and the person is also a fresher. Who will bring down the valuable inputs? Nobody. So ultimately your startup will be failed. So it's better to have a startup with the skilled people. And to get skilled people from the market, you need fund. To retain a skilled people, you need fund. So the funding is required at an early stages also. Then marketing and customer acquisition. Your product is very new and people are not aware about your product. So great product won't succeed without a visibility, right? So in this case, for a marketing strategies to marketing, advertising, you require funds. So early funds majorly invest into branding, promotions, and the growth perspective. So you actually require a larger amount of funds at an early stage only because you need to invest that into R&D, prototyping, hiring of great candidates as a skilled person. Then you have to also invest into branding, promotions. Then you also have to need to invest into infrastructure like getting the logistics, technology. If you are into the businesses where you need to have certain licenses to be generated, you require funding, you require legal compliances. So all these are requiring funds. But the important part is now you have funds, but you have to survive with a no revenue for a specific phase. So major startups don't generate any revenues immediately. So you have to wait. You have to wait till it goes to a certain level and then it will start generating a funding. So in finance, in accounts, we have a very important concept called as a BEP, break even point, right? So at this stage of the startups, you should be aware about what is your break even point. Break even point is below that point, there will be no profits. But after that point, whatever the extra amount that you earn will be generating profit to you. So in the early stages or in startups, there will be a phase where you do not generate revenues. So until that phase, you have to require to have the funding with you. Another requirement why it is critical is because there is a speed and the first mover advantage. So with the funding and the startups, you can move very faster in the market and you can capture the market very easily. And lastly, you need investors, mentorship and network. Beyond money, angel investors and the venture capitalists built in or bring in their more industry expertise, guidances and their networks. Okay, so this is why funding is critical at an early stage startup, because if you have any ideas, you are going to note down these points and just see that you are going to require fund at all these levels, right? So you have to manage, you have to look for a number of amount of funds based on these investment that you have to do. Okay. Now let's talk about a startup journey, how it starts. It starts with a very basic phase called as an idea phase, right? So it is a phase where you have your some or the other way, you have an idea into your mind that you want to conceptualize that idea now. So this is the very first stage. Second stage of a startup journey is now you require funding. Funding for what? We have discussed the reasons. R&D, prototyping, hiring skilled, marketing, advertising, then bearing no revenue phases, then getting licenses or legal compliances. So you require funding. Now once you get the fund, this funding you will get it from the angel investors at a very initial stages, right? So this funding you will get it now. Now from the funding, you will develop a product. Now you will launch a product into the market. You will wait for the success of your product. And then you are going up to the larger scale of growing your product. And finally, you are talking about upscaling. So here at this stage, you require angel investors when you require basic funding and initial funding. And when you want to scale up your business from this basic level to an advanced level, you require a venture capitalist. Okay. Yogesh, can you just park your question? I will be answering all those questions at the end. Will it be okay?
Yes, ma'am.
Okay. So this is what is a startup journey is about. Now, just a global snapshot I have given, like where India is right now at the stage of a global ecosystem. If you see, the Bangalore has the maximum startups with them. They are at the rank of 14. If you compare globally, they were having majorly the early stages. Then the sizes are in India is the third largest worldwide country, which is having more than 2 lakh startups with them. Funding dynamics so far till the date of first quarter of 25, we have received 4.8 billion has been raised so far in the funding requirement of investors. Support, Karnataka is the state where supporting the deep tech, pushing 50% of tier 2 and tier 2 presence because of their very great robust government policy which is supporting the startups. And India is also facing a lot of strategic challenges while converting and putting them as a rank into the global standards. Okay, this is just the key insights I have given it to you where India is. And yes, India is actually supporting the startups. Okay. Now let's talk about the startup journey, startup funding journey, how it has started with. The very first stage, we call it as a self-funding. So we call this as a bootstrapping phase. Okay. Bootstrapping phase is what? There is a founders who are investing their own personal savings. And sometimes even they borrow from the friends and the family also. Okay. In these cases. So this is the very first stage where you have a self funds available with you. So you start putting your funds into your ideas. Then you start with an early prototype of your product. We call it as a minimum viable product that you try to identify with these early self fundings. Now, what are the advantages of having to be stayed in this stage is because till this stage, you are only the owner. Nobody else has put in their funds. So still the ownership is there with you as an idea generator. And because nobody has yet given you any funding, so there is no pressure. So you can obviously distribute your time and the funds the way you want to because nobody has yet given you the funding. So this is a very relaxing phase at the beginning of a startup, which we call it as a bootstrapping. But there is a limitation of funds. So you cannot put lot of efforts into these stages. Then comes the angel investors. We call it as a investments enter at a pre-seeding or a seeding stages. Okay. So angel investors, what they do, they get the early external funding from the angel investors and that goes around. Now this is the highest range I have given. The lowest range it starts from as per your requirement. So you can even raise 5 lakhs also through the angel investors, 10 lakhs, 20 lakhs as per your own requirement. So that amount can vary. But there is a limit, upper limit of raising funds in the angel investors. So what they do, these angel investors at this stage, they use their product development to basically they invest these funds. Now you have funds. Now you use these funds into your R&D. You hire the skilled candidate and you invest in your funds into the early marketing phases of your product. And at this stage, the investors, the angel investor, believe into your vision and the team that you work with. They are not here for the revenues. Reason being is you have not even developed a product, so you are not aware about what revenues it will be generating. So there is a two possible cases. One case can be you will generate a higher amount of returns on the higher sides, revenues. But the possibilities are you can even have the failures also. So it's a very dicey stage where nobody is trusting you, but the angel investors are ready to give you the fund only depending upon looking at your vision and a team. Then comes the seed funding, which is a furthermore upgraded versions of angel investors, where you can increase your funding limit. So there will be angel networks which will help you out, micro venture capitalists who are not offering a larger scales but on a micro level, and there are accelerators and the incubators present in the market who really interest into R&D of your product, so they will be giving you extra fund for that. So in that case, there will be an exchange of equity at this stage where we talked about actual seed funding. Pre-seeding, we are not talking about revenues, we are not talking about equity shares. But in the seed funding, if you approach for a seed funding, the investors will look for the equities that they have into your product. Means equity means the ownerships. Then comes the venture capital. Now, venture capital offer into the series like Series A, Series B, Series C, and it continues. So, Series A will give you the funding which is beyond the seed funding. So, if you see here, given an example of going from the funding from 5 crores to 10 crores, scaling business on the upper side. Series B is investing into expansion into new market. Like it's you have already the one product into your market, still you can approach a venture capital because you want to diversify into new market, enter into new market. So this is the new series that you started with existing product. So there you can approach venture capital. There you cannot approach angel investor because the angel investor only provide you in the pre-seeding phases where your product is at an idea stages. Then the final raising will be done through the IPOs, which we are very much aware. When you want to go from private phases to a public domain, when you are opening your IPOs to the market where the common people can come and purchase your equities. So that is offered through initial public offerings into the primary market of a stock market, where you can list out your company into the stock exchange and raise funds from money. So this entire game is about raising funds, and there is a stages of raising funds. Initially, you have to self-finance yourself. Then on the upper side, you have to approach angel investors. Again, on the higher side, on the scaling up a business, you have to approach venture capital. Again, going on to the upper side, you have to raise your funds through the common public through the IPOs. So these are the stages of funding, like stages of generating from a product level development to reaching to the final objective of becoming a private limited company, public limited company. Any doubts so far in this, what we have discussed?
Prior to seed funding, can you show that you had something?
Which one?
Prior to
Which
seed
one?
funding. Prior to seed funding, you showed angel investors, right?
Yes.
Okay. They don't
Pre
seek
and the
for
seed.
equity, right? Or they also seek for equity.
Yes, they are basically here to give you the basic investment amount starting from 5 lakh, they are ready to give you. So there they are not looking for any equities at this level if it is a very smaller amount.
So how do they benefit then, angel investors?
I'm coming to that. I'm coming
Okay.
to that. Okay.
Okay.
So what they look for, obviously there is an exit policy, na?
Okay.
There is an exit policy to that. So they
Okay.
are not giving you free money to use. They are obviously charging interest on that.
Ma'am, is
Okay.
there any thumb rule of diluting equity at these stages, or it is completely prerogative of the company and the investor?
It is only with respect to the startups. Okay, we
Yes,
are
ma'am.
not talking about equity dilutions here.
Like angel investment will come in exchange of some equity in the company, as you mentioned, because they are not going to invest on you on your idea without getting anything from you. So that is only equity at
No, but at
That's
this
so. Is
stages,
there
they are
any?
only looking for an interest as a return. If you are going
Okay.
and approaching venture capitals, there you are talking about equity diluting.
So angel investor, they don't take any share in your company.
Majorly, if it is the amount is very lesser, they will not obviously look for it. Again, what type of a product that you are offering, what type of a market fitment it has, what type of a vision that you carry, where it will take you after so many years. So there are a lot of factors associated with it.
Okay, ma'am. And at seed funding also.
Now, at a seed funding, they are looking for an equity divergence.
So is there any benchmark yardstick or any common thinking or any basic knowledge? Okay, at seed funding, any startup can dilute this much or can give this much equity, anything, or again that is again depends upon the.
Majorly, it is being basically given at per the requirement like 10%, 20%, 30%. How much investment that you are putting it through the seed funding, that will decide. There is a ratio. And that ratio is decided by the investors and the networks.
Okay, madam. Okay.
Okay. But SEBI as a regulator will be looking for a strict perspective that where you are investing your funding. So SEBI has given the guidelines for that.
Any way to get that guideline?
On the SEBI portals.
Okay, madam. Okay, thank you.
Okay. Yeah. So let's move on to the next. The next we talk about the angel investors. I think this is up to this it is clear what are the preceding financing stages and how where the angel investors comes into picture, where the venture capital comes into picture. Okay, now let's talk about the angel investors. Who are they and how to approach them? This is very important, how to approach them. So who are they? We have discussed, we talked about angel investors as an HNI clients, high net worth individual who have their personal wealth and who want to invest their personal money into the early startups. So there will be successful entrepreneurs, industry professionals who actually want to, they have done a lot of investments avenues, but now they want to try into the early stages finances also. So they are not just a capital, but they also provide you mentorships, industry connects and credibility. And obviously it's like, I am an entrepreneur, I will require angel funds. Obviously I'll be approaching somebody who is aware about what product I am offering. So for example, you as an HNI who is having your personal money, but you will be obviously invest into your areas of investment, your areas of interest. Like we cannot go like diversifying your fund into some or the other rocket science product that you are not aware about it. Obviously you go into the same line where you have the knowledge about, where you can tap the markets, राइट जिसमें आपको पता है कि इसको आगे जाके कितना फ्यूचर मिलने वाला है, कितना मार्केट इसका आगे जाके बढ़ने वाला है, then only you invest. So they are the right person to mentor because they are coming from the same industry. They will give you the industry connect, they will give you the idea where you can post all your marketing advertisement, where you can generate the maximum amount of incomes or returns from it. So in India, the many angels invested through the angel networks. So it's not like you, for example, somebody from you is having a net worth of, let's say, 1 crore available with you. Now you want to invest. So you are not going and tapping the market. Who is having the early stages, who is having the startup. Obviously, you get yourself connected with an angel network. So these angel networks is like an avenues providing to the investors. Those who have fund, they will collectively come there, they will establish their network, and as a startup somebody will approach that network, and now you are aware that this startup is looking for money. If you like that idea, if you like that pitch, you go and invest. Okay, this is how the angel investor works. Now why do they invest, right? Obviously they invest because they believe in your vision, passion and potential. If they would have not done it, Flipkart, Airbnb, and lot more startups would have been survived in the industry. So they look for the high risk, high reward. Yes, we always talk about, when we talk about investment, we talk about the risk. When we talk about risk, we talk about the returns. So simply when they invest through these angel networks into any startup, they know that there is a high risk associated with it. But they are ready to take that risk because later on stages, if there are rewards on it, it will be on the higher sides. So they basically, after certain timelines, they look for the potential returns, maximum returns from it. And after some times being giving them the continuous funding, they will look for the perspective of equity ownership, but not initially, maybe on the later stages. So what they offer money, they offer mentorships, and they offer networks. So these are the three things that they offer commonly to you as a startups. Now, what they look for. So I'm explaining this from the perspective of you as in startups. So you have to provide this, then only people will come and invest in you. Okay. So what angel investor will look for? They look for the team. Team in the sense that whether you are passionate, creditable, you yourself is convinced that your product is going to survive in the market. So they look for the balanced skill. Like, do you have technical knowledge? Do you have a business knowledge? And if they will give you funding, will you able to execute? So they will basically ask for the entire plan of yours. That if they provide you 5 lakhs, where you are supposed to invest those 5 lakhs. So you have to be prepared with your entire project ideas or a project report. Then only they will be convinced to invest into you. Or it's like, you give me funding, I will later on see what I can do with that. No, nobody is going to enter to in you based on these perspectives. So they look for the team. Secondly, they look for the idea validations. So problem is real and worth the solving. So whenever there is an idea, whenever there is a product to be developed, they look for these perspectives. Yes, is the real problem is identified by giving this product? Will it be giving the solutions? Is there any evidences of customer interest on the early feedbacks based on that? Because in the prototype model, in the testing phases only, you have delivered your product to, let's say, 10 customers. So you have taken the feedback from them. So the angel investor is going to evaluate the customer feedback, whether the customer liked your product or not. If the customer didn't like it, they will not invest. They will say simply, your product is a failure. In the prototyping phase only, in the testing phase only, people are not ready to accept it. Then obviously there will be no future. So they have their own parameters to judge you based on these things while investing. Then they will see the scalability of your product. So they will see the potential growth in the market. So right now, where there is an entire business of AI is going on, cryptocurrency is going on, if you bring on any idea which is having only the physical presence in them, angel investor will not entertain that idea because they will say, what is the future? Who is going to buy your handwritten notes when the AI is ready to deliver all that? Yes, they will look for the feasibility, they will look for the scalabilities, they will look for the business model, and that business model needs to go beyond the smaller regions. Lastly, they will look for the tractions. Traction means who are the pilot users, what revenue model that you work upon, is there any partnership that you want to involve into, is there any collaboration that you will be getting into, suffixing your existing product. So they will basically look for the proofs that your idea is not only into your mind or is not only into a paper, but it is actually feasible to deliver that product. So the angel investor will look for all these perspectives before investing. Now, how to pitch to an angel? So pitch is very important. Pitch means I'm talking about telling a story. It's like I have a product. I have a product, now you all are my investors. So I have to ready to sell my product. You must have seen Shark Tank. Shark Tank देखा है आपने? आइडिया है आपको Shark Tank में क्या होता है?
Yes.
Yes, ma'am. Same thing.
Completely aware? So it's the
Yeah.
same
Yes.
thing. Your entire idea is completely going to believe by the next person on the way you are telling a story. So the very first thing that you have to be ready with the pitch. Start with a story. What is the problem? How that problem is appearing? And what are the solutions that you have provided with that problem? So start with a story like, this was the case where I have gone there and there I have identified that there is a gap of this product. If this product would be there, it would have suffixed my problem. So I have come up with this product as a solutions. So then show the problem solution fitment. This was the problem and this is what the product I have to offer. So that will connect the points. Then you will see, you will tell them, you will highlight the traction point. Like every customer, every pilot, every partnership is matter to you. So it's not only on the paper, but it is already there on the execution part. Then you have to tell them that what best people you already have or what best people you have already approached to execute this idea. Then you have to tell the market opportunities. You have to demonstrate the size of the market, how it will grow, what are your plan over for 6 months, over 1 year, over 5 years down the line, how much scalability that the product is showing to you. Right now you're offering 10 products, 10 units. Later on you will be giving them 20. So on, the scalability keeps on increasing as per the usages. Then ask clearly how much you are raising. Just be specific that what are your funding requirement and where to get the funding requirement. You actually have to draw the entire project report कि आपको R&D में कितना लगेगा, टेस्टिंग में कितना लगेगा, स्केलेबिलिटी चेक करने में, मार्केट फिटमेंट में कितना पैसा लगेगा, then you how much you will be spending into your advertisement. You have to give them a brief idea and then come to the exact figure. You are looking for so and so amount. Because fundraising ऐसे ही होता है unless and until you are clear about that idea. Now, for example, your project is saying that you require 10 lakhs, but you are quoting 20 lakhs. There should not be too much deviations in between. Yes, you can quote 15 saying that 5 lakhs you kept as a margin, and every time, every stage you have to show how much margin you have kept. That excess you require. So you have to be very specifically clear that how much you are looking for and the exit potential, because angels are investing for returns. So you have to tell them exactly at what stage they will be beneficial and at what stage they can exit. Exit policy needs to be very clear that after reaching to that scalability, you reach to that point where the angel investors can take out their funds now, because you have gained enough where you have generated your own funds in such a way that you don't require angel funding anymore. So this is how you have to be perfectly pitch your idea. Now, let's take a quick example. Just give me a minute, okay? I'll be back. Give me a minute. Okay, so let's take an example, a very simple case of WhatsApp you all are using. So what was the story? In 2009, WhatsApp, as we know, it was a simple application sharing the ideas, sharing the messages with each other, with almost no revenues earned so far on that till that date. Then they have introduced with an angel funding. So they have raised $250,000 from the 5 angels, and they were their friends, families, and supporters. So what has worked in the case? The very first thing is the product that they were offering was very simple, ad-free, and it is very importantly, it is used as a global communication tool. Okay, that was their idea and that was their vision, and people believe in their vision, so they have given them the fundings. Scalability, what they have shown that they have a potential to grow across border with a very minimal cost of investments on it. This is where they have shown that they are going to tap the market, future market, into the next 5 years. They use the tractions to show them the actual results, that within a month, thousands of users adopted it because it is very simple to use. So they have done a prototype testing, and there they have shown a result that people are approaching this because it is very simple and is used as a global communication tool. So angel have believed on this and they have given them these investments. Then later on we all are aware that angel funder give them a runaway to grow very rapidly with this amount. So they have launched with a various amount of features on the WhatsApp. And later on in the year 2014, we know that Facebook have acquired WhatsApp for that $19 billion. And it was one of the largest tech acquisition that has taken so far in the history. Okay, so this is how a simple angel investor will help you to accelerate, put a little push to your existing product and will take you to the reaching on to the higher margins. Now, how to approach these investors? Now here we are only talking about Indian approaches. Okay, so yes, you have to leverage the network. So you have to get yourself associated with that alumni of that particular product related alumni, LinkedIn and startups event that you have to obviously do attend the startup events, because there is the only possibility where you will create a network. Maybe right now you don't have any ideas which is jumped in, but possibly later on after attending these startups events, you might strike up with any of these ideas and there you can meet the investors also. Then you have to join angel platforms. So register platforms which are available in India. I'll be also showing you those platforms. Then you have to also start with a warm introduction. So get referred with the mutual connections. Cold emails sometimes also really help to work. So your pitch should be very important. That's what I've said. Whenever you're selling, your pitch should be very great. Have a solid pitch deck. Highlight the problems, solutions, market sizes, traction, and what team that you have with them. And then show the early traction like the pilot customer, show their feedbacks, show the prototype, how it has proved well, show the revenues, and this is how you will be actually going to tap the market. Okay, now this is how you're supposed to get connected with the angel investors. Now I think this is a very interesting part for you, that these are the angel investors platforms right now available in India. Indian Angel Network. Like I have said, the angel investors usually doesn't work alone. They work through the network. So this is Indian Angel Network, IAN websites, which is one of the largest angel networks in India. And they have almost given 500 plus investors. Another, you can even take a screenshot of this, Mumbai Angel Networks, Let's Avenues Ventures, which is specially popular platform connecting startups, Lead Angels, focus supporting startups from IITs and IIMs background. This is very important. This is the startup which is opened by the IITs and IIMs background, where they are ready to fund your ideas. Venture Catalyst, India's largest incubator provider and accelerator platform. Now, let me just quickly take you to this website. Okay, I'm not taking much of a time because I have to cover the venture capital as well. So just quickly, I'll show you how it worked, so that later on you can go and have access to that. Just tell me whether my screen is visible.
Not yet.
Is it?
Now it is visible.
Okay, now this is it, iangroup.vc. Okay, now this is an group, angel investor providing money, mentoring and market accesses. So this is a group investment philosophy that they have. Now you can see how many startups that they are funded with. Wow, Momo, Spinny, Nayam Innovations, likewise. And this is how the portfolios were created and this much that they have invested. And you can, if go through later on with this entire websites and see how they have raised it and what are the ways. So you have to get in connect with them. There are platforms offered to you where you can definitely help. These platforms will help you out to get connected, to get the angel investment for your own startups. Okay. Now, this was about the angel investor. Now, a little bit further, we are talking about a venture capitalist. which is a far step beyond the angel investments. So venture capital is what? It is a type of a private equity finances, providing by the investors to get the startups and small businesses. Which businesses? The businesses which shows the high growth potentials. Who are providing these venture capitalists? They are provided by the capital firms, venture capital firms, institutional investors. How it works? The investors invest money, and in the exchange of that money, they will look for the equities or ownerships. There is a key goal why startups will be preferred, because the providing funding, not only funding, but it also gives you the mentoring activities, helps you to get the industry connects and reach out to build up your own creditability over the period of time. Because the next stage that you have to tap is going to be the public raising funding, and public fundraising can only be there when you have a good creditability in the market, good reputation in the market, on the simpler note if I say. Now, the venture capital will invest into the high returns where the company will grow and goes into the public. Now, who are they? They are the professional fund managers who are managing your funds, pooled candidates funds. They are institutional for capital backed by the pension funds, banks, endowment policies, high risk, high returns investors. And it also talks about beyond providing money. So they not just provide fund, they also provide mentorships, connects and all that. Similarly, like approaching the angel investors, the right stage to approach venture capitals are show them your tractions, show them the product market fitment, what are your growth potentials, and what are your clear business model that you're offering to the existing market. So this is what they will actually look for these stages. If you have fulfilled these stages, they will be helped to invest in you. Now, like an angel investors, while getting the funding from the venture capital, there is a process. First process is pitching. Get a good pitching and the screening. Founders pitch to the VC firms. Due diligences, you have to get all these checked. Your financials must be checked, your market opportunities, your tractions, and the legal compliances. Do you have all the licenses and the legal compliances that have you done with them? Then they will check you the term sheets like agreement on the valuations and what equity that you will be offering to them. And what investor, as an investor, if they invest into your firm, what rights do they possess? So they will look for all that. Angel investor will not look for anything, but venture capital, as they are offering you the higher amount of funding, they will look for all this. And very importantly, they will look for where you are going to invest those funds. So if the funds are released, where the venture capital will take one of the member of your board members and they will help you to monitor the progress report. They will ask you the question where you're putting all your funds into and what rate of returns that you are generating from it. And then it will clearly show you the exit strategies. What they look for market size, they look for strong team, they look for scalable models, and they look for the revenue potentials on the sites. India is now majorly get the fundings into the VCs like SaaS, fintechs, healthcare, climate. Major funding is diverting into these areas now. Also getting the funding into AI and deep techs, ESG is investing. Then micro VCs are at a seed stages, pre-seeding stages, and also they're looking for the cross-border investments. Now these are the venture capital firms available in India like Excel India, especially focusing on SaaS, fintechs, and logistics. Peak Access partner, which has funded Byju's, Zomato's, which are funding the growth stage investments. Matrix partners funding, especially into the tech and consumers like Ola, Practo. Nexus has get into the Postmans and the Unacademy fundings. So these are the venture capital firms in India which has helped these startups to scale, to put their business onto the scalability parameters. This is the very basic difference which you can easily understand now. Angel investors are basically HNIs, Venture capitalists are professional fund managers and institutional investors basically. Stages, angel investor provided idea stage, prototype and stage, basically early stages. Venture capital introduced at a growth stages. Very smaller investment size that is starting from 5 lakhs to 2 crores appeared in the angel investment. Beyond the larger amount of 5 crores or more, the venture capitalist can be approached. Similarly, the risk appetite is higher in the angel investments. Comparatively, venture is lower because you have reached to the stage where you have launched your product, people are accepting your product, you have reached to some market limits. Now you want to grow. So basically, growing opportunities are available in the venture, whereas in angel, it's just a basic push that is required. So these are the basic difference between angel investors and a venture capitalist. Now let's quickly understand the case study of Ola and Ola, how they have changed it. The idea stage of Ola Caps were at 2010 when there were two startups, the two individuals, Bhavish Agarwal and Ankit Bhati. They have started with a very small ride-hailing service in Mumbai and now it has reached everywhere. So initially it has started with a bootstrapping. Bootstrapping means self-funding that they have started with initially. Then in 2011, they approached for the angel investor like a Snapdeal founders, Kunal Behel and the Rohit Bansal, who has funded them for the Ola. And they have expanded their tech platform and the driver network after the angel funding. They shown the tractions, rapid adoption in the metros. And then in 2012, they entered with the venture capital funding. They get the funding from Tiger Global Management Company, raised $5 million of funding, and they put all those funds into aggressive marketing, getting their presence into multiple cities. And as an outcome, we see that today, Ola is operated across India, one of the largest, biggest unicorns, and the investors, early investors have also get the maximum multifolded returns from these investments. So this is how one simple idea can bring out a market potential and can raise this much amount of million amount of funds to be raised through the angel investments and through the venture capitals. Now, what should be done when you pitch? Your pitch, this is the practical tip I am giving you. Your pitch should be very crisp, like a 10 to 12 side: problem, solutions, market, traction, team, and what you are asking for. That's it. Don't just get into the entire stories and every line. Just make it very crisp and clear. What are your target areas? What are your products? And how much you are looking for the funds. Then show them the tractions, small early wins that you have done. Be clear and ask for one, how much you want to fund. Highlight the team strength, how much ideas that you have. Give them demo days, incubator programs, launch the networking strategically, and practice your pitch with the very shorter terms also. And sometimes if you get a very great time of 10 to 15 minutes, we can even prolong that. Now, one of the another crowdfunding activity that has been even introduced as an angel investor is there are some platforms which are even offer you a ready-made pitches. So you just have to tell them your product, your attractions, and how much you want to get the fundings. They will help to build up your pitch also. So please take advantages of those platforms also to get a very great pitch to be developed for your product. And what should not be done? The common mistake that you have to avoid is overvaluing the startups. Don't give unrealistic valuations. Unrealistic valuations will bring in funds, but at the same time, it will build a pressure on you because the investor keeps on asking the higher returns where actually it is not feasible to give you those returns. So don't overvalue. No clear business model. We'll figure it out, will not work. You have to be very clear whether it is a profit model, whether it is an investment model, what type of a model that you're offering. Then ignore competition. Saying we have no competition is a red flag. Yes, you have to be very clear what others are offering. Ola is there in the market, still Uber is launched. So do you think that Uber has not studied the entire story of Ola? Yes, they do. So what they have done, they are offering far more better opportunities. They have taken Ola as a base and they have convinced the angel investor to invest into Uber, showing that Ola has grown. So we will also grow. And at the same time, they have offered the lesser market price to be into the competition mode. Should not be lack of financial clarity. You have to be very clear with the revenue model, what you are offering for, where you will be investing your revenues, how much returns you will be keeping out of it, and don't overpromise your growth because you yourself is not sure, right? So please don't overpromise anything and pitching too early without MVP, without market validations. The possibilities of losing the investors are pretty much in that case. So you have to be very well prepared in these cases where you're offering these pitches. Okay. So this is it. We have concluded that the angel investor, we talked about investments, venture capital. So funding is not a fuel, not the destination. So it's not that you got a product, you got an idea, you got the funding and it stops. No. Use funding as a fuel to reach to the final destinations. Angels and VCs play a different role. Right time, you have to look for the right investments and get the right fitting done. And investors don't just back ideas, but they do back the founders with a vision, mission, teams that you are providing them. Okay. So this is it for the day. You have any doubt, you can ask.
Excuse me,
Yes.
madam.
Yes.
One thing I want to know: the angel investor always wants some higher return, or they want some equity sometime.
It depends on which platform you are approaching. As I have told you, it is an angel networks are there. So sometimes some networks has been created such a way that they are looking for equity base. But majorly, if it is a very lesser amount, they will look for the returns only. But if you
And
go for a seeding, I'm only talking about pre-seeding stage. But if you look and approach them for a seed funding, they sometimes look for the investments or equities also. Okay.
okay, thank you.
Yeah. Yes, Suganya.
Yeah, actually, I've not reached the stage of, asking for a fund or raising a fund. I have
Okay.
got a patent in my name. So I'm trying to develop my MEP. Soon I will do it and expecting to finish it by this month. So this
Okay.
patent has been there for, it's a 6-year-old patent now.
Okay. Patent you have, right?
Yeah. So I don't know
Okay.
how to go about it further.
Okay. In that cases, there are certain platforms will help you to develop an MVP in that cases. So I suggest you to better get certain investments done in that and get the better MVP done. Because unless and until you have better MVP, better prototyping, investors will not ready to believe on you.
Yeah, I need support for that. Can you give me more information about that?
Right now, I cannot give you, but surely you are an existing student, so please do raise a query.
Sure.
And I'll definitely help you out for that case. Sure.
So can I get your email ID or a password?
Mail IDs, you can directly write it to the academic query stating that you are looking for this specific level of, what you call it as guidance for that.
Okay.
Okay.
Can I get your contact details?
Actually, we are not allowed to share that. That's the reason.
Okay. Can can I have a separate session on this topic? Is it?
I'll just check with the availability and we'll let you know for sure.
Sure,
Okay.
sure.
Yeah.
Okay, fine.
Yes. Anybody else?
Ma'am, I have two queries. I'm Vivek Garg, and
Yes.
I'm the student of the post-graduation diploma of data science. And
Okay.
I'm a lawyer, and I'm running uh, law and financial advisory firm, corporate
Okay,
financial
great.
advisory firm. And our
Great.
work is mainly is for provide to startup funding
Exactly.
to
Great. Then you
the
are the right person to be approached for sure.
It's only 2 years before we have started, and we are having the pipeline, having the 4 projects in the pipeline. One for the defense technology from the Israel. It's the first time they are transferring their direct transfer of technology of the drones for
Great.
the army to the India. And
Great.
we are looking for the VCs for that.
Yes,
And
great,
one
great.
of the company and two companies are uh, and two companies are related to the IT companies. It's one in
Okay,
the robotic and one is in the customer relationship management. So I
okay, great.
just want to take the help in that we are finding the problem in finding the sharks. Means we are looking for the angel investors, and
Okay, 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 okay,
so
okay.
I
So
doesn't
have
we
you
are not
gone
having
through
the
the
experience.
yes, yes.
We are
So
not having the experience to look for
basically
the high tech
you
companies.
you have to tap to the network which is providing you the investment specifically into the informatics or maybe into the data sciences, where actually this is what your what we call it as your investors are looking for, right?
Yeah.
So basically you have to see
That's why
network
I'm
is
personally
very
I'm
big.
doing the
Yeah.
course in the data science
Yes, yes.
to know
Network
the
is very
technologies.
big. So you have to actually tap to only those people who are having their expertise into those areas. Then only they will be funding you out for sure.
Yeah.
Okay, so you have to
So
specifically tackle and tap those networks which are help you out into getting these kind of a fundings for you.
okay. So how we had to find out means just like the approach you have given, provided the slides here that it is the same approach
Yes, it's
to
kind of a similar
tap them.
approach you can definitely, but as you're looking for a very, great project like handling some Israel project that you're discussing, then in that case, you have to also look for the investors who really is having that backed up with all these technological advancement as well, right? Because
Okay.
at that time, people are not just looking for a funds, they will also look for a mentoring, they look for a networking and all that perspective.
So we had to hire the consultants, also technology consultants for those industries.
Exactly, exactly, exactly. Those who are aware about it, because in that case, you have to create write your pitch in that way, na? Otherwise, how the
Yeah.
investor are going to get
And
convinced?
we have to look that what kind of the technology is it's already available in India or not. So for the technical specification, we have to for judging and for the calculation what are the technology cost is coming out. We have to hire one expert in that
Yes,
from the
yes,
both
right.
side.
Yes, yes, right. Correct, correct, correct.
And
Okay.
okay,
Thank
thank you.
you.
And what are the suggestion for us? Means there are the many company. I doesn't found many companies are there. Many law firms are not working in this era, in
Exactly,
this domain.
exactly, exactly, exactly. So
This is very
suggestions is the very first thing is obviously you have to create your own network in such a way that people should be open up in approaching you, both the
okay.
startups also, and also basically you provide a link, right? You provide a
Mm-hmm.
link between those who are looking for funds and those who have funds. So you have to
Mm-hmm.
basically approach both of them, not just an investors, but also you have to look for the startups who are looking for the funding requirement.
Right.
Okay.
So we are actually sitting between the sharks and the investors.
Exactly, exactly. So you have to provide a link. So you can have the tech fairs to be done, very smaller investments where you have to invite and collabs, get the collabs done from them. So I suggest
Mm-hmm.
you arrange a coffee meets where get their ideas and call your investors there and get the discussions going on, like what type of investment that they are looking for or how much funding that they have to offer you. So basically networking should be very great in that case. So create a
Okay.
networking rise on a very often levels. Then you can create a databases of both the investors as well as the one who are looking for investments.
Okay.
Okay. Yeah. Thank
I
you.
just want to invite the all the colleagues who are sitting here if they want to
Sure,
approach to
sure.
us from
Definitely,
via
definitely.
Symbiosis.
If you are looking for that,
Is there the Symbiosis also? Symbiosis used to give any kind of consulting in that?
right now we don't
Means
offer anything into that. Yeah. In distance
okay.
learning, we don't offer anything into that. Okay.
Okay.
Yeah. Thank you,
Okay. Thank
Vivek.
you.
Nice talking to you.
Thank you.
Yes. Any other
So you
question?
can give my number and my email ID if
Actually,
anyone
we are
to
not
invest in.
allowed to, Vivek, we are not allowed to do that. So you can definitely
Okay.
tell your name where they can search you on the LinkedIn. LinkedIn is
Um,
biggest the network that they can find you for sure.
my company name is Success League Business Solution.
Success
So it's
League
the
Business
website.
Solutions.
Yeah.
Okay,
Uh,
so please, students, those who
.in.
are looking for the investments, please do approach them, search them
Success
through the
League,
LinkedIn.
successlink.in. I'm giving my website on the chat.
Okay, okay. Thank you. Thanks, Vivek. Yes.
Yeah, actually, I'm looking forward for licensing.
Licensing.
Yeah. So
Yes,
this is
Suganya, get connected with him, no? Then he has given his company name. Vivek, can you just type it so that I can make it visible to all? Type it in the chat box. Even Ketan is ready to get
Yes,
connect with
ma'am.
you. Ketan Meghani is ready to get connected with you. Okay. Yes. Any other questions in this regard?
So I have one question with respect to Startup India initiative. Is it a venture capital? I mean, what is that kind of support it is?
Startup India.
Yeah, from the
Basically, they
government.
are into angel investments.
Angel investments.
Yeah.
Okay. So how secure is our idea when you approach these people, right?
That too,
Because
you have to probably take a chances in that case, no?
because I'm unsure about it. So when you have a
So
very
basically, see, it is only about, see, there will be not like only one initial discussion will take you out and give you all the funding. There will be sequence of discussion that will happen, no, over the period of time.
okay. So I can gradually reveal more
Yes,
information
yes,
as it
for sure.
progresses.
Gradually, it will be built up for sure.
Okay, because that is always a concern for me when you have an initial
Exactly,
idea.
exactly. And the last thing, if you remember, I have discussed that always be aware that there is going to be competition. Just
Ah,
convince that how you are distinct from the competition. That's it.
okay, okay.
And it's
So,
not like every time there is a new idea that will be punched in, and every time there will be only new ideas which will get funded. The common ideas even get the fundings.
my concern is if there is a new idea, would that be known, exposed outside? Would that be replicated after I
That
have
too,
pipeline?
depending upon what policies that they are having. No, they're having
Okay,
their own policies.
okay.
So might be there they have not mentioned. It is not disclosed because obviously they are also working on the ethical concepts, right?
Okay, okay. Based on that, we should trust them, right? That's what.
Yes, 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 for sure.
Okay, okay, yeah.
Okay, yeah. Anything else? Yes, Devadatta, I think Vivek has given. I'll just give his linked successleague.in. Okay.
Yes, ma'am, it will be really helpful.
Oh, I'm not able to post it, but you can note it down. It's success. SCU, sorry, SUCC
Success League Business
League.
Solution.
Yes. SUCCESSLEAGUE.in. Successleague.in, where you can approach Vivek.
Oh, Success League Business Solution, he has said, but
He had said so, but I don't know. He has given this only, Success League. But Vivek, again, I'm telling you that these people will approach you from a different perspective. I hope you will guide them for sure. And generally, we don't do all these things in the classes itself. But as if this was a angel investment class, so do they have their ideas? They will definitely be happy to discuss with you. Okay.
Ma'am, we will definitely take care of them.
Sure,
We will
sure.
doesn't call the
Because the
name of the
ethical aspects we
of
have to
the
see, na?
yeah,
Just now somebody has said,
yeah,
right?
yeah,
Yeah.
yeah, ma'am.
Okay.
If they can approach with the professional approach, we will take care of them.
Yes, yes, for
And
sure.
we will not bring any kind of the name, the bad image for the Symbiosis. Symbiosis is the second course I'm doing in the 25 years. 25
Great,
years
great,
before 20 years
great,
before I've done the post-graduation diploma
great,
in
great. See, this is
CRM.
where see, this is where I think the problem lies up into. Like there are n number of companies offered in the market, but again there is a gap in reaching out to those platforms. So yes, please do approach for them, for any other companies, those who are giving you ready to give you the angel startups also. Okay. So I think that
Okay.
is, thanks a lot for the entire
Excuse me,
session.
ma'am.
You enjoyed it. Yes.
thank you, ma'am.
Thank you.
Thank you, ma'am.
Thanks a lot. Yes, Pallavi ma'am, we have done with the session. Sorry,
Yeah,
I have
and
prolonged it so long.
no problem, ma'am. It was wonderful session.
Thank
Actually,
you,
your
ma'am.
expertise has given us a deeper understanding of funding landscape for early stage entrepreneur. And we are confident that today's learning will inspire and guide our participant in their entrepreneurial journey. So if there are no many other question, we can end up. Is
Yes,
it okay?
thank you, ma'am.
Thanks.
Thanks a lot. And thanks, participants, for a wonderful interaction. Thanks a lot. Have a nice
Thank
day, all of you. Bye.
Bye.
Thank you.